What's going on, guys, and welcome back to another video. So in today's video we're going to go through 5 companies that I'm going to be looking into in next week's stock market. And if you're new around here, please consider subscribing to this channel, as it would really help me out going forward. So with that being said, let's dive right into the first company. So the first company is Workhorse Group, and again we've already made a few videos in this company. So if you haven't seen those videos, Workhorse is an American manufacturing company based in Ohio, which currently focuses on manufacturing electrically powered delivery and utility vehicles. The company is traded on the Nasdaq and has ticker symbol WKHS, and at time of recording, their share price was $24.81. You can see from Workhorse's 1-year chart that they went from this time last year, they went from about $3 a share up to around $30 a share, and they had a dip from about $30 down to $22, but over the last few days they've went from the $22 range up to just under $25 a share again. We can also see here that Workhorse Group was the first of the companies that I've added into the YouTube pie on my Trading 212 portfolio, and already it's up 16.58%. Now, as I only had €50 invested in this company, it's up about €8.29 going forward. But I'm also going to be adding in a lot more companies, again, ones that I've mentioned in my kind of Sunday videos of kind of more speculative growth stocks. And because they're kind of more risky stocks, I won't be putting a lot of capital into them. So for example, you can see here that I put €50 just as a kind of a punt, I guess, on the Workhorse Group. And so far it's paid off. And some of the other companies I'll be mentioning in today's video will be more speculative / growth stocks that I might also be including into this pie within next week's investing. The two main reasons why I'll be looking into Workhorse Group this week while investing is, number one, they've come out that Workhorse delivery van can travel 160 miles on a single charge, and this will bring more appeal to more customers, so it kind of gives their overall broader market, which is certainly a benefit to any company. And the second reason, and probably the more important of the two reasons, is the USPS contract that is looming. So you can see here that if Workhorse could capture this USPS contract, that could seal a $6 billion pay rise in their company. The second company is also in the electric vehicle sector, and it is in the form of Lordstown Motors, and it's now currently called Diamond Peak Holdings due to the merger, and it is traded on the Nasdaq, and it has ticker symbol DPHC. And at time of recording, its share price is $23.89. So the main reason I'll be looking at Lordstown Motors or Diamond Peak Holdings is because one of two things. One, because it's in the electric vehicle sector, so I find this sector is certainly undervalued at time of recording. And also you can see here that Lordstown Motors shows their electric truck interior, and they confirmed 40,000 pre-orders. So that's certainly very promising news for the company going forward, which can certainly help increase its share price as the weeks go by. The third company that I'll be looking into this week is Virgin Galactic. Now, as like the last two companies I mentioned, Workhorse and Diamond Peak Holdings, Virgin Galactic is also another speculative stock and can be quite volatile and certainly very risky. I might be adding this company into the YouTube pie on my Trading 212 portfolio, as well as Lordstown Motors. So that's going to be interesting to see how this company goes. But again, I'll be only putting a small amount of capital into this company, as it's quite risky. Now, Virgin Galactic is a British space flight company within the Virgin Group. It is developing commercial spacecraft and aims to provide suborbital space flights to the space tourists and suborbital launches for the space science missions. So certainly very interesting company to look into. So Virgin Galactic is traded on the New York Stock Exchange and has ticker SPCE, and at time of recording its NAV was $16.43 per share. We can see from the company's 1-year chart that, as I said previously, that it can be quite volatile and is quite a speculative / risky stock. You can see here that it had highs in March of about $37 a share, and went crashing down like most companies between March and April. So it went down to about, let's say, $11 or $10 a share, and it slowly started to increase again, and is currently at about $15 to $16 a share. So the reason I'll be looking into this company is I feel it's a very exciting company and has a lot of upward potential in terms of risk reward ratio. And again, as I'd only be putting a very small amount of capital into this company, I wouldn't really mind if it went bust in the end, but it's an exciting company and I believe the risk reward ratio is promising. And we can see here that Michael Sheets said on a tweet that after a call with Virgin Galactic, Jeffries says that a second Ship 2 spacecraft is on track to roll out by the end of 2020. So again, that will be in the next few months, which is certainly very interesting. And if this actually does pull off and work, the share price in this company could skyrocket. Pardon the pun. The fourth and fifth companies on this week's list, the people who already know these companies very well and you probably own some of these products already. And the first of these being Apple. Now, Apple is traded on the Nasdaq and is ticker AAPL. And at time of recording, its share price was $112.28. Now, Apple, in case you're living under a rock, is an American multinational tech company headquartered in California that designs, develops, and sells consumer electronics, computer software, and online services. So we can see from Apple's 1-year chart that this time last year, it was trading at about $50 to $55 a share and is currently up to about $112 a share. Now you kind of see why I'm kind of looking at this company this week is because when you look at the 1-month chart, you can see that a month ago the share price was over $134 and it has crashed down to about $112 in the space of the last month. So the 4-to-1 stock split certainly kind of didn't do the company any favors in terms of their share price. Now, because Apple is certainly a long-term growth stock, this company is going nowhere, so dips don't faze me one bit. In fact, anytime the company drops in value, I'll be adding it to my position to help improve my dollar cost averaging. And another reason I'll be looking at Apple this week is because there's been leaks of the iPhone 12 launch by the end of next month, so that will certainly pique interest in the company, which will only be of benefit to its share price. And the fifth company that I'll be looking into this week is Facebook, which is traded on the Nasdaq under ticker symbol FB. And at time of recording, its share price was $254.82. So Facebook is in the communication services sector and is an American social media conglomerate corporation based in California. And again, like the prior company we looked into, Apple, Facebook has also dipped quite a lot in the last month. So even in the last month, it went from, say, $302 a share, and it's after diving down about $50 to about $254 a share. So as I feel that these kind of companies, such as Apple and Facebook, and companies of the like, are long-term growth companies that are going nowhere, and if anything, they're going in an upward trajectory over the long term. Dips like this pose great potential to buy even more companies shares in this, so that will bring down my dollar cost averaging yet again. So I'll be happy to buy up shares of Facebook at the current price of $254. So with that being said, guys, that brings the end of today's video. So the 5 companies that I've looked into today, so Facebook and Apple, I'll be increasing my positions in these companies to improve my dollar cost averaging. And the other 3 companies, Workhorse, that I've added in a few days ago, that is already up 16.58%. I'll be adding to that position, and I'll also be adding in 2 companies that I've mentioned also in the form of Virgin Galactic and Lordstown Motors. So I'm going to put both of those companies as well into the YouTube pie going forward. And again, as the 2 of those companies will be more speculative / growth risk stocks, I won't be putting a lot of capital in, but it'll be kind of more just for fun to see how they do over the long term. So thanks very much, guys, and I'll see you all in the next video.